Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another daily cryptocurrency market update where we don't just explore the realms of the cryptocurrency market, but we also look further afield at external markets and try and use them to help us navigate where we may or may not be heading. So that's exactly what we're going to be doing in this video. We've got some really interesting things to get on with. First of all, I hope everyone's had a great start to their weeks and is having a magic Monday. There are, as I say, some very interesting things going on. Recently, we had OPEC come out and essentially say that they are going to restrict oil production. Now, this is going to have a bearing impact on inflation. We know what's driving the Fed inflation, and we know what's driving the markets, which is interest rates and quantitative tightening. And actually, we've seen what I believe is quantitative easing on the back end of Silicon Valley Bank and a number of other things. So this is certainly interesting. We will explore this a little bit on this video. We're going to go over a number of other sort of gripping headlines. This is a headline from today. Ethereum 200 days after the merge, $4 billion in Ethereum not added to the supply. We've got the Shanghai upgrade. That is set to, I think, take place. It was set to take place actually in March. However, I think we're going to get that this month. This will essentially unlock a lot of Ethereum that has been staked, some of it for a long period of time. This was very, very interesting that we'll dive into. This is the liquidity situation. Crypto is worsening after the banking fears this month. And it looks at Bitcoin liquidity, and maybe there's something to be said here. So we're going to go through this tweet. I found this rather interesting. There's a number of other things. This is, of course, from Bullish talking about how, we all know his $1 million Bitcoin bet that he's essentially got going on. I don't believe Bitcoin's going to $1 million in the time frame that he says it is. However, I do think he's on the money with the reasons why Bitcoin would go to 1 million. We'll also discuss this. This is looking at a double top for Bitcoin. Very interesting. It brings up a number of good points. It also talks about actually the expectations for the next Fed fund meeting, which we'll talk about. Investors pour money into crypto investments for the 4th straight month. And then, of course, we'll look at April, and is it a bullish month for the crypto space? So let's just start things off, guys, with the Bitcoin chart. Nice and simple. You guys know that there's a journey I believe we are on. Let's get rid of what potentially could be a falling wedge. This is a potential structure that couples in actually very nicely. Bitcoin has broken out of its year and a bit long downtrend. And not only did it break out from this, it actually came back to retest it. So this is a very bullish sign. And the interesting thing with this potential falling wedge scenario is there is the DNA in other altcoins. And actually, we looked at Bitcoin a while ago now against the likes of the S&P and against the likes of gold. And this has progressed significantly since we were calling for the breakout. And it's done rather well. So we ultimately believe that Bitcoin is on this trajectory. Not only did we have the precursor, which was this bearish dive or bullish divergence for Bitcoin that we had on the weekly RSI. We had the bearish divergence at the 64K to the 69K, and then we had a bullish one down here. Now, this isn't something that I would trade in terms of giving me an entry. This is more just an observatory note that kind of gave us some sort of confidence that maybe this bear market or maybe this downtrend was coming to an end. These RSI divergences typically occur at the end of a trend, and what they're showing you is that the momentum on the lower low here was less than the low here, which shows that this trend is potentially vulnerable to change. Not that it's 100% going to, but there is a degree of accuracy with these divergences because they're really momentum based. Not only did we have that, which was potentially the precursor for the bottom, we also now have this inverse head and shoulders, which is how the trend ends. It's a technical pattern that takes us to the upside. You guys know that gives us a 35K target. And we think not only Bitcoin, but the altcoins are in this kind of 5-wave structure. And the third wave is the current journey that they're on. So we think things are very much set, and we think the macro situation couples in with this. We know what drives markets. Rates are driven by inflation up until recently, and that, of course, was Silicon Valley Bank. That's now driving them, and we can see this in the 2-year yields, which we think has topped. And you can just bring up markets to see how they react with this. You can see as rates go up, markets adjusted and went down, and so on and so forth. And we think that essentially this coming down is going to, and it has been, what's ultimately front-run markets. So technically and fundamentally, we are bullish. However, it's an ever-changing situation. Last night, we had news from OPEC, which essentially have came out and said that they're going to cut oil production. List of countries that have announced that they will be cutting oil production. OPEC Plus just made the Fed's job more complicated. Here's why they did it and what could be next. So this is very, very interesting. We know what's driving the Fed inflation. I think you're going to get a lower print for March. However, it may rear its head again. I have been watching oil somewhat closely. And you can see actually March wasn't the best month. However, it did see, and you can see this is insiders trading this on the weekly. And then, of course, it's had a huge jump on the back end of cuts. You've also got things like natural gas, which are significantly lower. So it's an ever-changing situation with the inflation story and something that we've got to watch. And ultimately, OPEC doing this isn't helping anybody out. But, of course, they're profit-driven, not sort of ethically driven. Ethereum 200 days after the merge, $4 billion of Ethereum not added to the supply. So what's this all about? A quick take. It has been 200 days since Ethereum transitioned from proof of work to proof of stake. The total Ethereum has decreased significantly. Had the merge never happened, more than 4 billion in Ethereum at current prices would have been added to the total supply. So there is this sort of potentially deflationary element to the merge, which is pretty interesting. And ultimately, I think the merge is largely bullish for Ethereum. And I think actually the Shanghai upgrade, even though it may cause a little bit of sell pressure in regards to a lot of that Ethereum getting unstaked, actually it's bullish long term because it gives more of a complete package for Ethereum. This was a interesting article. The liquidity situation in crypto is worsening after the banking fears in months. I divide into several liquidity metrics to give an update on all things crypto liquidity. First, BTC liquidity has dropped to a 10-month low as market makers lose access to USD payment rails. So we have seen this, of course. Silvergate was a massive player in regards to how crypto institutions do business with one another. And you can see actually, if you look at where the liquidity is, this is USD and USD trading pairs. You can see that it's at a low. So is that fueling the rally? If you have low liquidity, the moves that you get within the market are exaggerated as people buy and sell because there's less of it going on. So it can be more one-directional, just as a rule of thumb. The US exchanges have been hardest hit due to the closure of USD payment rails and crypto bank market makers in the region facing unprecedented challenges to their operation. You can see here. This is non-US exchanges and, of course, US exchanges. Spreads for USD pairs have displayed a similar trend, suffering more volatility as a result of uncertainty in the US. Same story for slippage. On a 100K sell order, Coinbase BTC USD pair has increased 2.5x. Coinbase have struggled for volume standpoint despite the launch of their layer 2 base and fears around USD. Binance has gained 20% market share since July thanks to largely zero fee pairs. So this is a very interesting article. I'm going to leave a link to this in the description. How does this affect things? Well, ultimately, as liquidity worsens, opportunities arise. US bank fears have resulted in greater disparity to price of BTC USD pair compared to an average 10-month exchange. Expanded on the thread in a piece for CoinDesk today. For me, the BTC rally was kicked off due to legit narrative as USD hedge, but most of the surge after that was due to illiquidity. BTC markets have been this thin for 10 months plus. So I disagree. I think ultimately what's driving markets is the Fed funds, and we do have a lead indicator, the 2-year yields, that's suggesting this comes down. So markets front run this to the downside in regards to the 2 years going, in regards to the yield, the interest rates going up, restricting liquidity. I think what you're going to get is you're going to get something like this, or maybe one more hike and then something like this, and then it's going to come down. But markets will front run that in the same way they front run it to rates to the upside and they sold off in accordance. They will front run it to, you can already see, potentially front running this coming down. And that's my kind of play. So I think there's a lot more going on here than just in a liquid market causing Bitcoin to rally, because actually you can see, even if you look at the likes of Grayscale's GBTC, which is kind of an institutional barometer, if you will, beautiful double bottom there, nice rounded right butt cheek, you know, this really led the pack. So I think there's far more to this than everyone's trying to pinpoint one thing, and I think there's multiple things, and I think ultimately the macros changed and the technicals have supported what we've now had with the macro. Technicals were bullish, and that's why we took a stance into the markets at the start of the year before the kind of fundamentals or macro landscape had kind of changed and given us some sort of a narrative. So the oil situation is concerning, but we'll see how that plays out in the price and how much of a big difference it makes. Of course, this is from Pelagi, again, just highlighting just how screwed the US are from a banking point of view, from an insurance point of view, from a pension point of view, because they're all stuffed with bonds, and bonds have been getting absolutely killed. And ultimately, the road that the US were on has caused significant pressure, just like we saw in the UK market with the gilts. And ultimately, this is why I think this has come to an end. You know, I think it's unsustainable, the route that they're on, and ultimately they're diverging from it. This was interesting. It talks about a Bitcoin double top. I do not rate Cointelegraph's technical analyzers in the slightest. You know, it's calling for a double top for Bitcoin. I mean, okay, maybe. I mean, I would say actually, you know, this is more of some sort of a rising wedge. You've got this kind of grind line that you've now spilt below. But I wouldn't read too much into this, guys. You know, ultimately, the journey that we're on here, it's not going to be straightforward. We've stopped at this really significant point. Is this my retracement tool? Around about your 236. You've also got this nice bit of volume here that you've ran into. You're ultimately, in my opinion, going to consolidate before setting up for continuation. Now, whether that consolidation comes in the form of, you know, you can see you've reached this top here, whether that consolidation comes in the form of, this could be some sort of a grind line that you'll spill below and then set up for continuation, or whether you just continue from here, it is still to be seen. But ultimately, I don't think a double top is too much to worry about for Bitcoin. I do not rate Cointelegraph's TA sources, really. However, you know, I do think this is quite an interesting one, and they bring up a number of interesting things, like looking at the next rate hike. So the next rate hike's in May. I think we're going to get for April, you're going to have lower CPI come out for March. I've seen some leading indicators of that in the European markets. And ultimately, I think this is going to fuel Bitcoin to the upside. And I think people are largely ignoring the Fed now. I think alt season is still yet to really happen. And you can watch Bitcoin dominance, of course, for that. Investors pour money into crypto investments for the fourth straight month. Assets under management of digital asset products climbed to $13.4 billion in March, up 60% from their 2020 low in November, according to Crypto Compare. So this is interesting. Again, we have seen institutional involvement. Grayscale's GBTC is a kind of barometer for this. I think there's a lot of things supporting upside, you know, whether we have a little leg down before we get that upside, but ultimately if you're trading on a weekly or a larger time frame, you know, this is largely insignificant and just how markets move. They don't just go up in straight lines. You're going to have periods of consolidation, periods of restation, ultimately leading to the upside. And is April a good month for Bitcoin? Potentially. April seasonality in favor of Bitcoin and stocks. The first month of the second quarter usually sees bullish environments for risk assets. And you can see here, this is April's typically a decent month. So are we going to have a decent month in April? My analysis is I believe we will. But that's not based on it being April. That's based on the technicals. I think the Fed's largely going to be ignored now because they're doing one thing or saying one thing and doing another. And we've seen that in regards to their balance sheet. So that's the plan, guys. Still sticking to it. Ultimately, there's lots going on. We will keep you up to date on a daily basis of how this is all affecting the markets. Bit of a lackluster week. I think we've got on Thursday some pre-non-farm data that may move the markets. And then, of course, got the non-farm payroll on Friday. I think actually this could be quite bearish for the dollar. Remember, the dollar is the other side of the story for Bitcoin. You know, I think this is looking at downside in my opinion. There was the potential that you might catch a little bid here, It's continued to sell off. Once you run this, guys, you're coming back down to here. I think the dollar is largely in trouble, and I think the only thing that's going to propel it to the upside is a demand destructive event or a kind of fear event. But I think the dollar's going to do something like this, and then maybe does something like that, and Bitcoin is doing something like this, and then maybe does something like that, if that makes sense. That's all I've got for you in this video, guys. Have a magic Monday, and I'll catch you all in the next one. Thanks a lot for watching. See you in the next.